Hey, what's going on, my friend? I have a question for you. Are you tired of using your own money to finance your deals? Of course you are, right? I was tired. When I was a BFC, sorry, that means a broke, frustrated chump. When I was an employee working for the government, right? Broke meaning living paycheck to paycheck, frustrated, overworked, underpaid, and a chump because I would complain, over drinks to my coworkers, but I did little to nothing to change. But when I was an employee, I always used my savings and my 401k to buy real estate. But it came to the point where I would work my butt off, let's say for 18 months, just to save enough money for a down payment. It was just too long. And I was being forward thinking, I started to realize at this pace, I would never quit my 9 to 5 because I'm dependent upon me. I thought as a mom and pop investor, a landlord. There's nothing wrong with landlords. I too was a landlord, swinging a hammer, changing a doorknob. I'm plunging that toilet 2 in the morning, knowing damn well I gotta wake up early in the morning. It wasn't fun. I was doing everything myself, from the management to acquiring the property, doing the due diligence, putting the money up to the table, the whole 9 yards. And I realized I'm the one that's holding me back. I have to think like a real estate entrepreneur. How does a real estate entrepreneur think? Well, they only focus on few activities and they do them extremely well. What are those activities? They focus on finding the money and finding the deal. And when I say find the money, again, it's not just their savings, their 401k, but it's finding the money, period. OPM. Could be other people's money. It could be the bank's money through business credit. They focus on raising capital. That's what entrepreneurs do. They don't just focus on the money they can bring to the table, but how they can leverage their network. How can they leverage the bank's money? Because why do you think banks are in business for? To lend you money, right? And I hear that a lot from beginning entrepreneurs, from startups and real estate investors. They always say, oh, it takes money to make money, now I got it. Well, if it takes money to make money, why not use someone else's money? Use the bank. That's why they're in business. And by the way, to all my real estate investors out there, when you do use your own money, guess what happens? You actually get a less cash on cash return. What's cash on cash return? Allow me to explain. It's the amount of profit you receive per year. So let's say you have a rental property and you get $1,000 a month in cash flow, the profit in your pocket. So that's $12,000 for the year. 1,000 times 12 months, 12,000 for the year. And let's say you invested money out of your own pocket of 48,000. It doesn't include a mortgage, seller financing, but 48,000 cash out of your own pocket. In that scenario, your cash on cash return is 12,000 over 48,000, which is 25%. Obtaining 25% cash on cash return for an investment property is very good, by the way. There's nothing wrong with that if you have 48,000. But how long will it take you to get access to another 48,000 if it's your own money? If it's your own savings. Yeah, you might be a baller. You might be balling out of control where your income's concerned. You might have a lot of money. Oh, I can get 48,000 off a show. Oh, I can get 48,000 by doing this right away. But for most of us, 48,000 is what we make a year per salary, or even less. So it takes a long time to get 48,000. But what if you got that 48,000 or 50,000, just to make the numbers easy, from business credit? Most of our clients, when they apply for business credit, within 30 days, they get the business credit cards in hand, and they use that for real estate investing. They didn't have to work tirelessly at a 9 to 5 for months to get access to 48,000, 50,000, and so forth. They spent 15 minutes filling out an application, and 30 days later, had the 50,000 in hand. So much more easier. Now let's go back to that scenario. Let's say you said that same property, but you bought it differently. You're still cash flowing 12,000 a year, but let's say that 48,000, you got that from the $50,000 you received in funding from business credit. So how much of that money came out of your pocket? Zero. It came from business credit. So, what's the cash to cash return? 12,000 for the year divided by 0. For all my math geeks out there, that's called an undefined fraction. Undefined meaning you receive an infinite rate of return on your investment. So once I came across that realization, I was like, Eureka! I should 100% finance all my deals. Hence the name of the company, 100% Finance. Obtaining an income producing asset using little to none of your own capital invested. So there's no limit to how many deals I can do. My focus again, and your focus as well, should be on getting access to money and then getting access to deals and connect the dots and get cash flow in your pocket. That's it, my friend. That's all you have to do is finance your deals 100%. So you might be thinking, well, Juan Pablo, where do I get this business credit that you speak of? Let me guess, you offer it. Absolutely. No upfront fees though. Only thing we want to do is provide you with a free consultation. Then if you like what you hear, no pressure. You can move forward. But if you don't like what you hear, no pressure. Don't move forward. It's free consultation. There's no gimmicks. There's no sales tactics and blah, blah, blah. But trust, the business funding that we offer, you can use those for real estate investing. Other companies who try to duplicate our process, I know who you are. But are you an avid real estate investor who used business credit like I did? I have 48 units with a 6-unit contract. I've acquired up to 72 units by investing, but typically, you flip some properties, you sell them, so I unload some of my inventory to 48. Flip them for profit, right? And pay capital gains, which is another topic. But I know how to use business credit. I know how to liquidate it to use it for multifamily investing. But some of our competitors, unfortunately, I won't state their names, they provide business credit, but it shows up on your personal credit as an account. So that messes up your debt to credit ratio and your debt to income ratio. For others, they provide business credit, but you can't liquidate it. So what's the point of having it if you can't liquidate it? We only provide business credit that you can use for real estate investing so that you can have infinite rate of returns on your capital invested. You probably heard the statistic. 70% of millionaires in America got their start in real estate. So my question to you is this. Do you think the majority of those millionaires who got their start in real estate did it all by buying properties cash? Of course not. They use leverage, and that's why I love real estate investing, because of one word, leverage. You can walk into a bank, a lending institution, and say, hey, I want to buy this $100,000 property. Give me 80% of the money. It's called a mortgage. They'll say cool with it as long as you qualify. Hey, I also want to do 10% from the seller. The seller will say yes. Or hey, I also want to finance the latter 10% from business credit. Business credit will say yes. So that's why I love real estate. Using leverage to the point I'm getting an infinite rate of returns on my capital invested. Now, most real estate investors, they've used piggyback loans in the past prior to the crash in 2007. But since 2007, those piggyback mortgages are unheard of because they were variable and so forth. But you can still finance a good portion of your property using mortgages, seller financing, and business credit. And that's the math I typically use. 80% comes from a mortgage, 10% seller financing, and the latter 10% business credit. So I discovered the system back in 2012. From 2010 to 2012, I had about 7 units in my rental portfolio. Again, I was primarily using my savings. So this is me on a ramen noodle diet, scrimping and saving months on end to get 7 units. But then once I had that change in mindset and started financing my deals 100%, that year alone, by my 29th birthday, I've acquired 21 rental units. I was using hard money, I was using private money, I was using mortgages, of course, seller financing, and last and certainly not least, I used a lot of business credit. I will apply for business credit every 3 to 6 months, and every time I got a new round of funding, I will find a new property. I will find a property that fits my pockets. And you can do it too. So I would say if you're interested in becoming financially free independent and quitting your day job at 30 years old like I did with 30 rental units in your portfolio, it's a repeatable process. The first step is finding the money. How do you find the money? Apply using the link below so we can call you to disclose your options. We'll provide you with solutions on getting started right away. But if you don't take the first step and apply, unfortunately, we can't help you. Now, I don't want you to go ahead and apply on your own because you might get business credit or personal credit cards that'll be detrimental to real estate investing. Because you might find a credit card in which, oh man, this is my personal credit as an account. Or oh man, I can't liquidate it. Or, oh man, I applied for too many personal credit cards. In fact, I have to wait to get business credit because I have too many hard inquiries on my credit report. I've seen it all. I have so many students who reached out to me after the fact. And I have to say, you know what wisdom is? It's you following a proven system step by step. So that way your mistakes are virtually removed, minimized. Because I don't want you to make those mistakes moving forward. All right? We care about you. As always, guys, this is to your success. Earn passively, live passionately. Apply below. Peace.